What's up, everybody? Michael Silva here. It's that time. You know what time it is. It's time to hit that thumbs up button if you haven't done so already. This is the Stock Market Brief Show. Let's get into today's episode. Right across the board, much chop taking place in anticipation, obviously, of not only the CPI report that is coming out tomorrow, but we also have the very next day PPI. We have retail sales the following day, along with Michigan consumer sentiment. So those are important. Everything is important. The CPI data is expected to be 8.8. We will see if it comes in lower than expected or higher than expected. There's news out there saying that it's planning to be higher expected. We did have apparently a fake leak saying that the CPI was 10.2%. That was fun as the market sold off. Big news today, Microsoft lays off a portion of its workforce, part of a quote-unquote realignment. If you take a look at the heat map, what took place, well, Microsoft being a big mega cap, it definitely brought the market down. That was down 4.1% in a single day. That is a monster move, and it was breaking outside of its weekly expected move, which, remember, 68% of the time, closes within it, but we are outside of that. So, and it was on a big break of volume. So if we get more and more outside of it, it could create more selling pressure. Now, when that data came out, what I found interesting was, if you just take a look here, when that CPI, the fake number, came out, we saw some increased selling into just about the close. And this reminds me of the last CPI report, as you saw right here, big selling pressure. This was, I believe that the information was leaked to Wall Street Journal, and they did a report about it. Well, then we saw some massive selling, and then we saw a gap down the next morning. So we'll see here if we get something very similar that takes place. Today's video, we're going to be talking about the implied moves that the options market is pricing in on these index products, and some other various things. For example, the dollar. The dollar continues to perpetuate to the upside, really putting the pressure down on gold. Now, when I really think about this and you step back, the dollar is approaching its upper weekly expected move, whereas gold is reaching down to its lower edge. So this does look like it's potentially getting ready for a bounce here in the near future. If the dollar comes down, likely to see gold go up. As you can see, the correlation here based on the last 20 days is at minus basically 0.96, which is a very, very strong negative correlation with one another. So if gold starts, or if the dollar starts backing off, we might see gold potentially rally, but remember, we're starting to break trends here, so be careful there. We also might see miners potentially take some sort of a bounce here at some point. The XME has been kind of finding its footing around the 40 marker, but you can see here the gold miners bullish percent index, we are moving down into that oversold territory, and you can see we're getting a very low reading here. This reading right around 10, I mean, this is where we were almost where we were during the pandemic when we had a big hit to the downside. And then we saw miners rally like 200-300%, some of them, some of them even more. If you take a look at oil, oil was also big in the news today, down 7.93%, almost 8% down. Huge down day as we broke down through this just kind of a higher lows trend line. You can see we back tested it, we retested that 100-day moving average, and then we saw that sell off. So very likely to see some continued pressure to the downside. We did see some big volume on that move, but typically, strong moves like this, we typically get some sort of a bounce in some near future, right? Whenever we get these moves to the downside, right, bear markets, they never go straight down. And also, if you note here, right around this 95 region, it's actually matching up to this prior resistance here, and then support. So it could very well, coming into this 200-day inclining moving average, try to base out or consolidate for a little bit, digest. We will see. I know that when the CPI report comes out and the other data, it's going to shake up things. Also, to take a look at the yields, the 10-year and 3-month, which we have been tracking, is now at 0.74, so 74 basis points. It was at 81 basis points, so it is continuing to press down to the downside. As you can see, this parabolic move to the upside here. And then we have the 10 and 2, which still remains inverted, which could indicate very well that there are increasing recessionary risks, as you're probably hearing more and more people talk about. Now let's go ahead and take a look at the expected moves for the week and going into tomorrow's report. So first and foremost, a couple of things that you're going to be noticing not only on the SPY and these index products, but of various other equity within these index products. First and foremost, we're going to take a look at this red line and green line. This is just to display that price went through a period of expansion and now it is currently contracting. Okay, when things contract, it leads to expansion. When things expand, it leads to contraction. All right, and that's what we're currently in right now, coming into some obviously big reports. So as we're coming into these big reports, guess what? Price is kind of just contracting, getting tighter and tighter. So it's very, very likely that we see some sort of expansionary move here within this week, potentially even tomorrow. You saw something very similar right here, how price expanded, then we contracted, then we had an explosive move to the downside. Now, this is a bear pennant type pattern. So if we start breaking down to the downside on increased volume, that would be something to watch very carefully, because that would open the door to retest these market lows. As far as tomorrow goes, the options market is pricing in a move down to around 375 to around 386 on the upside. So that is pricing in basically a matching high to a lower low. Okay, so this is kind of what you want to be expecting as far as a range that goes into tomorrow's report. Doesn't mean that we can't get outside of it, but just be mindful of that. Today, if we look at the 15-minute time frame, we tagged the lower edge of the weekly expected move perfectly, and we started bouncing from that level. So in the short term, yes, we're working off some of these overextended levels to the downside. We are below the 5-day moving average, which it's rather neutral to slightly up. So we need to really recoup that level to feel a little bit more positive. So if price starts ripping up into this way, and this is the expected move for the trading day, and we're below a 5-day moving average, if this starts curling over, and we start backing up from that, this could present itself as a potential short opportunity if we start heading back down. If you want to play it long, just note that you're taking risk if you're buying it below this, obviously, 5-day moving average. You want to buy the right side of the U-turn, so if it starts getting back above 387.50, you can take a shot, but just note that that is that expected move on the upside for tomorrow's trading day. Okay, let's hop into the Qs. Same situation here, right? Expansion move, moving into contraction. As far as what the options market is pricing in tomorrow, 280 on the low side, about 291 to the upside. And like I said, we can break through those ranges. Now, keep in mind, if we go to the downside, that is going to be getting outside, just like the SPY, the weekly expected move. And look at where we closed today, the weekly expected move. Go figure, right? Okay, so take a look here. We got outside of it slightly, and then we started bouncing back in. Just note that we are still, just like the SPY, below a 5-day moving average. The longer we stay there, the more it's going to curl over. So if we start coming back up into it, just be mindful that it can act as a level of resistance, creating a potential good short opportunity. If you are waiting to be more bullish, then we have to recoup these levels to start heading higher to hit that upper expected move. So we will see coming into this week, most likely. IWM, same situation, right? Boom, 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 boom. Expansion leads to contraction. Tomorrow's move, it's pricing into around 175 to the low end, about 167.50. Okay, so continue to watch this, see how it develops. We're below that 50-day moving average. The RSI is below 50. These oscillators, right? The MACD looks like it's losing a little bit of steam, but that's not only in the IWM. The Qs looks like it's losing a little bit of steam there on the oscillator. Same with the SPY too as well. So it's getting pretty difficult to navigate this environment. We may need to be a little bit patient and wait for specific breaks to take place. But as it stands right now, the trend remains bearish on the dailies. The trend is bearish on the shorter terms. So if you are bullish, you need to wait for some confirmed strength to feel a little bit more confident in the trading session. Also to note, if we just take a look at volatility, actually, this is the VIX. It closed at 27.29, so it's still relatively high implied volatility for the next 30 days. RVX closed at 32.67. If you follow me on Twitter, I keep posting, hey, just a friendly reminder, volatility for the NASDAQ and Russell volatility is still above 30. Okay, this is where things could basically crash, right? So be very careful, because you'll see a lot of chop, or you'll see some just extensive type moves. Now, remember, volatility, it's plus or minus, so it can go up, it could go down, obviously. But these are this is why we look at, obviously, the trends and then the implied move for tomorrow to get a good idea as to where this price action may go. If we take a look at a couple indicators, I want to take a look at HYG compared to the SPY. So on the shorter time frame, HYG today put in higher lows, whereas the SPY put in lower lows. So that is, once again, one of these type divergences as we've seen prior. And when we saw those, we saw the SPY rip up higher. So that could be potentially bullish, but there comes with a little bit of a caveat. You can see here we have, you know, the HYG really tightening up into this area right around 75. If we break through that, I think that that's going to be bullish. But if we start breaking down, that takes away really this divergence. So it's something to pay attention to. If we look at the daily time frame for HYG, you can see here just high. It's struggling to get above that 75. And look at the volume here. It's really drying up. Okay, so volume that's drying up, price action is drying up or contracting. So we're going to see some sort of expansionary move. So if we start moving down to the downside and we see a big volume bar come in, watch out. However, if we start breaking up to the upside and we see a big volume bar, hey, that could offer up a potential relief rally moving forward. We did get a buy signal here on the CPC put to call ratio as it moved down below 0.95, but now it's sitting back above 0.95. So we'll see here if this can get some steam moving forward. This one's not updated yet. I haven't got the updated numbers for tomorrow's trading session, but it did cross down, so it will be something to watch. The last couple of times that this happened, well, we saw a nice rally here. That was the Santa Claus rally. This one was a continued rally over here. That was in March when we saw that big move, bear market rally. And then right now we're just crossing through it again. It's really hard to determine this, especially coming into a big report. And then we had these positive divergences building on the summation index. Something to note now is you kind of see this kind of curling over, flattening out a little bit. So that is something to just be mindful of, but it is still pointing up, whereas the the New York Stock Exchange is putting in some lower lows right here. So that's also a positive divergence, and you can see the same thing right here, positive divergence as the McClellan oscillator is also moving up, but we need to see this uptick here to see if we can get some further upside in the New York Stock Exchange, the broader market. And the same thing goes here with the summation index for the NASDAQ. Go ahead and take a look. Boom, moving to the upside. It's kind of flattening out, and be mindful that we're both below zero on both of these two at this current time. If we take a look at this is an interesting indicator. I don't know if I've shown this before, but I have to an extent. But this is looking at the relative strength of growth to value, but I hid that chart, and I'm just showing the rate of change of growth to value. Okay, and the reason why I'm showing this is because there is something interesting that takes place when the rate of change between growth and value crosses down below the zero line right here. It's at 0.03 right now. I highlighted in red those times that it happened, and you can see it falls down, it falls down, it fell down, it fell down, fell down, it fell down, it fell down, it fell down before ripping up higher, fell down, fell down. This was falling down, and now we're just about there again, which to me says, hey, careful here. If value continues to outperform growth, this could be an indication that we might see some further downside. It's not confirmed yet, right? We're still above zero, but I thought I wanted to point that out to potentially give some insight into that. Let's hop over to Bitcoin, and we're going to start at the Saylor to Schiff ratio. I haven't showed this one in a while because, well, it's just been heading down. Now we are starting to cross above that zero line, right? You can front run this if you would like. I'd be very careful front running this signal given the context of the market that we're currently in. When will this be an actual buy signal? For my specific strategy, right? Everyone could have a different one, but for my strategy, it has to close above there, which means on Sunday, so we still have quite a bit of time. It has to close above there. That's when obviously the new candle forms with Bitcoin, at least on stockcharts.com. So if this closes above there, that would be the buy signal, but that doesn't also mean just buy. Wherever this week closes, okay, the next week it has to take out the high of the prior week, and then that is technically the buy signal. So we'll see here. I'll continue to monitor and see what takes place. But just looking at the overall chart of Bitcoin, I mean, it looks weak. It looks like we're breaking down from this bear flag, bear pennant type pattern. So we'll see here if all of a sudden the market loves the information that comes out, or tomorrow or the next day, where we get these reports and it starts taking off. But as it stands right now, I mean, it's looking pretty weak, not only with Bitcoin, but also Ethereum and various other cryptocurrencies. Looks like it's breaking down from these levels, as clearly we're putting in lower highs and lower lows. So just got to be careful here in this current environment. That's all I got for you on today's episode, everybody. I'll see you back here tomorrow.